view of the marketplace. You know, we've got this big day view from the cash market open, the London session open. We've got the short-term view from the US open. And since the US has opened at 2 o'clock, the value's just been sell side. You know, and if we didn't appreciate that the US Open itself is a thing, we could look at this from half past and say, well, the only thing I should be doing is selling oil, right? So when you then bring that value line into that narrative, it kind of makes a bit of sense, doesn't it? Where the sellings came in from, because, you know, you might have all that macro value, but the one thing you don't have is you don't have macro pricing yet. Okay, we're guessing that 77.50 is macro pricing, but you know, we still have this idea that the short-term oil has still had that US sell side value in it. And we've got to acknowledge that that's the case, which is why my one attempt at buying at higher prices basically hit the rocks and it came back down and I scratched out. So obviously it means that we've got to go back to that drawing board of giving ourselves a bit of space to try and find that sweep. Now, the big build at the bottom edge is starting to become a little bit obvious. So the high probability is they're going to try and run a sweep through here, try and maybe even go after day session lows, which obviously is this bad boy over here. And if we can run the day session lows, then that could open the door to today's oil inventory sweep trade. And that might be a thing for us this afternoon. But they're certainly making us graft for oil profits today, guys. They really are making us work for our money. Nothing wrong with that. I like a day like this, I must admit. It's far, far more enjoyable than the days where it's just a straight line rally or a straight line fall. These are the kind of days that you should be cutting your teeth on these types of days. These are the days that you don't really go wrong very often because it always rotates for you. But trying to get in at the best possible price. There's a lot of examples to work with, a lot of areas to try and work prices. And just getting into that ability to practice this often as it is today is a great experience, and one that you should absolutely take on board very, very quickly, because you're going to get a lot of experience out of days like this. The markets need to teach you something every single day. And if they don't teach you something every single day, the problem you've got with that is, you know, you can go for hours on a straight line trend and not learn anything about it except just how to stay away from it or how to jump into it. But you're not getting a lot of lessons. You know, when you're getting a lot of spins, a lot of fails, a lot of top edge takeouts, a lot of speed, different values on a macro micro narrative, you're always asking new questions. And this is where the learning really comes in. This is when you make your breakthroughs. Is what is the market showing me right now at this price? Can I go now? Can I take a shot? It's like getting to that baseline and looking across, and you know, that question that Jackson was asked, do you take your shot? It never worked the last time. Do you take your shot? And then you look at it and say, well, the value's getting better, the level's better, the price is good, the momentum's good, the order flow is good. Damn right, I'm going to take my shot, and I'm going to take my shot. And even if it misses, it's still the right decision to take that shot. Even if it misses, it's still the right play. You know, don't get put off by it. You know, that's why we look at these things. That's why we build thick skins in this room, because you're going to get punished. You're going to get pummeled every now and then by the marketplace. And if you're the kind of person that goes off and sulks, you'll never be a live trader, because the market maker is going to make you sulk a lot, right? The market maker is going to make you come in to trades and you're going to say, damn it, why did they do that to me, instead of just getting on with it? They did it. So what? Get on with it. Just get ready to take your next shot. kind of ran out of time now on this trade, so we're now going to be starting to wait for the oil inventory reports. So obviously the key thing is to get your commercial levels sorted, right? These are not market maker levels. These are commercial levels that we show you when we come into the data reports. Well, that's right, Sammy. I mean, if you look at this as a storyline, look, 2,700 offers, 3,700 bids. 2,700 offers, 3,700 bids. If it wasn't for the data coming out, of course, everybody would be looking at that saying, let's get short. Because that liquidity there is going to try and pull the price, because that's going to pull the price. Whereas the short-term liquidity is going to push the price. So the idea there is when you see that 37 over 27, I mean, that's a big difference, right? 3,700. Now, a lot of people say, but if it's bids, why is it bullish? Because the bids are way down here, that's why. So that would suggest to me that they've got 3,700 short contracts versus 2,700 long contracts, right? So the reason why that's bearish or seen as bearish in a normal situation is because the number of big outside futures contracts is probably the equivalent of how short they really are. So it looks like they've got quite a lot of short positions still in place at the moment. This is the big commercials. And therefore, they try and facilitate that by taking the price down towards those commercial trade levels.